Hey traders, this is Blake Morrow with Trader Summit. And for the very first time, I have Mr. Michael Boutros of StoneX Group. Good to see you, sir. Nice to meet you.
Yes, finally. It's been many, many years online, but it's great to be here with you.
Yeah, as I know we were talking just before we hit record, and you and I have known each other via social media for probably a decade, maybe give or
Yeah,
take.
yeah.
And we never met. So this is really kind of cool to have you here. And I have a lot of respect for what you do and what you've
Cheers.
done over the years. Can you tell us, the listeners, a little bit about yourself, how you approach the market, where you've been, what you're
Sure.
doing? Yeah.
Yeah. So I have a finance major. I started in FX probably in 2004, late 2004, working for a brokerage. I then went on to sit on a trade desk for one of the oldest FX brokerages in New York. And I was there during the entire financial crisis. So watching that flow coming in, watching these massive market swings, no better way to learn, right? So
Right.
over the years, I developed my own strategy of multi-time frame analysis. Went from there to work for traded futures, managed futures accounts for a couple of years, and then landed at Daily FX where I was for 13 years. But the strategy I've sort of developed over the years is really disciplined to the multi-time frame analysis. So, your weekly chart, are you going north, south or north, west or east? Then your daily chart, kind of like your major interstate highway change, right?
Yeah.
Then the intraday chart, which is like your turn by turn, right? I might need to go south first to get to the north route. So having that kind of mentality of you have your broader trend, where we are in that, then where you're looking to execute is kind of the minutiae, right? That's where we get the level by level play.
Yeah.
So it's an awesome way to stay disciplined, in my opinion. And the biggest mistake that retail traders will fall into is not having a proper trading plan or switching your time frames, or kind of a long-term trade turns short or vice versa.
Sure.
So in an effort to stay super structured, that's kind of just the way I progressed through the years. So it's been great. It's great market activity that we're seeing these days. So there's a lot to
I
work
know.
with.
I mean, the FX volatility over the last couple of years has been, finally, I know those of us that are like FX centric, it's like, it's about time. It's been too long. But I want to ask you this because you've been around the block now for a long time. And I know, and like I said, I respect, followed your work for a decade or more or less, give or take a year or so, or two. How much does the fundamental macro point of view factor into your technical viewpoints?
Great question, and I get it all the time. So it's important for me not to distinguish the two as two completely separate things, right? So the fundamentals for me are always going to be that added conviction on the trade, right? And it also has to do with the time frame. So if the fundamentals are leading to a specific bias, that longer term I think will play. When I'm taking a near-term trade within the confines of that trend, yeah, maybe I'll be a little heavier because the fundamentals are backing it up.
Yeah.
Maybe if it's something I'm taking on a daily time frame, maybe that one, because the fundamentals are backing, that'll be a longer term position hold as opposed to a weekly or intraday trade. So the fundamental backdrop is extremely important. Do I use the fundamentals for trade by trade? No. And that's where I think the delineation happens. Trading into the release is kind of always been my go-to, instead of trading the release when you get economic data or you get
positioning yourself for what you think is going to happen, right?
Exactly. So you're taking advantage of the move as it's happening. But it's not like a delineation. A lot of people ask, do you completely ignore the fundamentals because you're never talking about it in your webinars? No, I don't ignore it. But again, on a day by day basis, trade by trade basis, you don't want to put that too much into your decision making process. But like I said, it's added for me. It's a conviction thing. Do you if your standard trade size is 1x, the fundamentals are backing you up, you got an economic release that's further pushing that trend, maybe it's 2x, right? But never justification for a trade. Maybe that's a little clearer way to put it.
Yeah,
Does that make sense?
That does make a lot of sense. Well, it's nice to learn your process. I would say that the way you approach the market and I approach the market, it's a lot the same way. It's kind of keeping those probabilities going in your direction, whether it's fundamentals, technicals, helping your technicals like kind of wiggle your way into a good trade position. I think it makes a lot of sense. It makes a lot of sense to me. So what I'm most curious about right now, this is a really interesting point we're at in the markets. We've got interest rate expectations that continue to rise. The Fed chair today and yesterday really hasn't derailed those ideas at all. You're seeing the dollar really, benefit from that. But we're moving into a really important week where we have, the jobs report coming in on Friday, and which, everybody's wondering at what point will the jobs picture start to look a little bit less bullish or hawkish. And is this month the month? So I want to ask you, going into this week, going into a very important NFP on Friday, what are you focused on right now, and what charts are you looking at? Let's take a look at some of those.
Yeah. So if you grant me a moment here, let me just share the screen. So with regards to the dollar, and specifically what, Powell was saying, I think today he actually took a step back and tried to walk back some of those comments as far as how hawkish he was. But I think this is actually a really important juncture for the US dollar. So I've been tracking this one for a while. We did get a break of that near-term uptrend early in the month, but here's a massive outside reversal taking us into a key region. So most of my analysis is based on three basic technical things. It's either Fibonacci retracements and extensions, very heavy user on that. Basic slope. So whether you're using Andrew's pitchfork or whether you're using parallels, just finding the proper gradient, and then just kind of getting a gauge on momentum. So helping you with your entries. Looking at the DXY right now, I think this is in a very, very critical position, right? So we're at 100% off the low. So if this is correctionary, 2 equal legs, the 38 off the high from last year. So a nice pivot point in price. You got that 200-day moving average just a bit higher. So I think near term, we've been walking into this, and obviously yesterday's commentary really kind of propagated this last push into the highs. But I do think near term, there's a risk for the rally here. Broadly, I'm still constructive on the dollar. I just think in the immediate front, on the back of yesterday and where we are in the levels, you're at risk for a little bit of a pullback here. I'm still constructive while we're above the yearly open, which is like 103.50s. But when you look at some of the cross trades, right, you see euro dollar hasn't really taken out the yearly low, where DXY, which is 60% the euro, has already done so. You've seen CAD, Aussie, Kiwi all breaking to fresh yearly extremes. This non-confirmation high, I like to call it, oftentimes can be indicative of near-term exhaustions, right? So one makes a new extreme for the year, one does not. I think, again, longer term on the euro, I do think you get a little bit nestled down, a little bit lower. I think that's where you look for a larger low. But for the DXY, maybe near term, get a little bit of a blow off. 105 is the monthly open. We'll see if that holds. But ultimately, I'm looking for a larger setback to get back on the long side here.
So going to like this week's data on Friday, are you personally expecting a beat, or are you expecting more of a reversion to the mean, maybe even a slight miss in the February jobs report?
Yeah, I am expecting for it to soften. I mean, I guess the word is I'm hoping for it to soften a little bit. But this notion, and I think Powell addressed it kind of yesterday, this notion that we have to see significant job losses in this kind of market, I just don't think we're going to see it. If we looked over the last, 10, 12 times that we've had to like sort of battle inflation, when we've seen inflation move up this fast, typically there's going to be, up to a 1% drop in the unemployment rate on those years, right before we start to settle off. So yeah, I do expect that we're going to see it start to build as far as the unemployment numbers. I think those will start to get a little bit bigger, but it's hard in this market. When you talk just around to, anecdotally, a lot of businesses still trying to hire effectively. You get all these mismatches, and that wasn't the right work, and finding the right people has been a problem for a lot of different businesses. So I'm personally not thinking we get that massive washout in unemployment. I think it starts to wane. The employment picture starts to wane, but do we get that, surge in the unemployment numbers? I don't think so. So,
the old good old days that we miss of 400,000 weekly job employment, unemployment numbers, right? The ones that used to create volatility. Yeah.
To a degree, Blake, to a degree, I think this whole notion of transparency with central banks, it's massively backfiring. because now it becomes the only story on the street. You know, back in the day, we used to sit there and wait on the wire and hear what the NFP number is. And there you go. You get to hear whether they're going to hike rates or not. And there you go. Now it's 3 weeks before, 2 weeks before. Oh, interest rate expectations it opens up so much more speculation. I feel like it makes it a little bit harder. And although the Fed is trying to be more transparent, from a trading standpoint, certainly makes things a little more treacherous, but hey, I love the volatility. I'll take it.
Yeah, right. Well, hey, that's some great points. What's your view of the stock market here? The S&P has been surprisingly strong with rate expectations where they're at. Can this consolidation sustain, or could we even go higher? What are your thoughts here?
So as of right now, here's the weekly chart. As of right now, and this is what I've been writing about for the last couple of weeks, is I'm kind of looking for a breakout of this 39, 41, 30 region. We've been in here for the last 4 or 5 weeks, well, even more so. That's just the May low week close from back in 2022, and then just that swing low from March of that same year. Massive pivots in price, right? Objective. If we drill this down even deeper, here's what the daily chart looks like. What's the word I want to use? I lean towards you get a little bit of a rebound here and then one leg lower. And then that's where we have to see what kind of reaction we get on that next drop. Ultimately, I do see risk tailoring off a little bit more, going lower. The question is, I guess it has to be, again, we go back to the Fed, right? So if we find some medium ground, 4105, I think is sort of like my level in the sand. Once we break through that, I think you look for a resumption of the broader uptrend in general. But from here, maybe a little bounce, looking for a test of these lows again. And that's when we find the final washout. If we break sub 39, I think it's game over. I think you have a much, much larger correction at hand. But right now, with all of the speculation of a soft landing and he's going to be able to engineer it this way, yesterday was kind of the interruption where, whoa, we might go even faster. But with him taking it back again today and the market, I mean, it's just too much comfort, I feel, with the whole prospect of what the Fed's going to do. So I'm looking for a little bit of a rebound here. Ultimately, I look for another test of the lows near 39, 28, 39, and then we'll take it from there. But I don't think we're off to the races just yet.
Okay, well, the fair enough. Let me ask you. I'm going to ask you one last question before we go. Maybe not technically related, but really more of your point of view when you're dealing with the markets. When you have inflation where it's at, and based on your research group over at StoneX and where you're currently at, do you feel that the expectation that rates might actually get cut later on this year if we dip into a recession, do you think that might be misplaced, or are you in the camp that you believe that the Fed's going to stay higher for longer?
I've been saying this for months. I've been saying higher for longer.
For longer, yeah.
I personally thought it was a joke coming into this year with the expectations starting to tail off for the cut. I mean, I see the rationale behind it, but where we are right now and how far behind the ball on inflation they are, I just don't see it's going to happen. I mean, even if the market takes a mean turn, even if we get the recession we're expecting, I think it would take a real nasty spill before the Fed would double back on this tightening track. I don't think personally we get up to 6, 5.5. They're getting a little bit high in the expectations. I just think it persists longer.
Yeah.
So even when we tail off and we hit that plateau, I do think they're going to have to hold that for some time to really quell down this inflation. And you heard it yesterday in his voice. The inflationary concern, I think, takes more and more root the longer we stay at these levels of inflation. It becomes entrenched, right?
Yeah, so fingers are going to get a little messy trying to stick that toothpaste back in the tube, I guess, huh?
Exactly.
Well, hey, Michael, or I like to call you MB. Tell us what's the best way to follow you. If I'm a trader and I'm just hearing your voice for the very first time, and I'm like, man, this guy's great. How do I follow your work?
Yeah, absolutely. You can find me on Twitter at MB4X. Pretty active there. All my research and charts are published there. You can find me on StockTwits, the same handle at MB4X. And you can find all the research and latest reports on Forex.com, a subsidiary of StoneX.
Well, I want to say I'm really appreciative of your time. I'm happy that we got an opportunity to meet and talk and see each other. It's so great. It's been a long time coming, and hopefully I can have you back on the show sometime in the very near future.
Absolutely. Good to see you as always.
Good to see you,
Pleasure.
Michael. Take care.
Cheers, mate.
Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.